So that's basically the macro setup for me. I'm very bullish risk, bullish crypto, bullish technology, bullish carbon credits, bullish bonds, bullish gold. Don't really have any of it. Starting to wait for things like copper because we've got some secular backdrops. I like secular trends, tend to trade the cyclical stuff anymore. I find it a bit boring, and I don't think it's very easy to make money consistently over time. I like a secular trend. And when, for example, when you look at the technology stock, we can take the NASDAQ. If we take the NASDAQ on a log chart, we've come back to the bottom of the log trend channel, and we've had all of the bottom indicators and signals. And usually if you can buy the cyclical sell-off when it hits the secular trend, that is the sweet spot. We're in that sweet spot now. We're in the sweet spot in crypto, technology. We will get there probably in copper as well, and a few other markets where it starts to get very, very interesting for very high future expected returns. We saw something not dissimilar in carbon as well. So that's where we are. Cyclical pressures down to the secular trend. I love my secular trends. My big secular trends are India, technology, exponential age technology. That's a whole host of things, from robotics to AI to EV to distributed data to metaverse. All sorts of things come in that bucket, and I've been writing quite a lot about that over the last few years. Exponential age is the other big theme. Stuff like, I like the Middle East, and maybe Saudi Arabia is the one harder to trade, but I think it's really interesting. I'm bullish on copper, as I said, carbon, for those reasons as well. And then crypto is the bigger bet for me because I think it has a higher expected return. Comes with more volatility, but I'm happy to stomach the volatility because I've got an income, thank God. And so that means I can allow the volatility of my portfolio moving around because I've got money coming in. But if you're trying to live off crypto, it's bloody difficult because it goes up and down a lot. So anyway, so that's where we are in my macro thing.
Raoul Pal, a macroeconomic investor, thinks that we have reached the ideal position in many exponential growth assets, where their values have fallen to the bottom of the channel of their secular tendency, and this is the time that has the finest risk to reward ratio you're ever going to see. In his most recent live stream, Raoul goes down precisely which assets he is positive on and why he is most bullish on cryptocurrency, which he expects to outperform and deliver the best return over time, but especially in 2023. Keep watching until the very end to hear Raoul discuss why he is not only placing his greatest wager on Ethereum, but also why he is purchasing NFTs in order to potentially optimize chain returns.
You got your eyes on any metaverse projects? I'm not really investing in the metaverse yet. Really, I had a go at tokens, I had Decentraland and other stuff. I know they've done pretty decently. We, for Real Vision, have been exploring and used Vatum, which I really like, which most people aren't aware of. And we've also obviously used On Cyber and 6529's OM. So those are the ones I'm really looking at right now. And that's really from a Real Vision perspective, as opposed to the broader perspective. I'm not really in that kind of gaming world, so I won't see this coming up. Obviously, Other Side by Yuga Labs is interesting as well. Let's see what they do. I'm sure they'll do something pretty good because they're pretty good at that. What do you think about ETFs in crypto? I think we've all learned the lesson that they're terrible in terms of anything that exists is based on a futures contract. The SEC is just a mess. So I doubt it. I think they just want to have that battle, and that battle is, we don't want you to have that. Meanwhile, something like George Noble's ETF, who was attacking me on Twitter all the time, George Noble's ETF, he's like, oh, Cathie Wood, these people are terrible, they're shocking, crypto's terrible. I think his fund's down to 70% in a month, which is pretty shocking. That stuff shouldn't be allowed to be an ETF. Raoul, is this the start of a new bull run in tech? Will crypto follow through? Crypto led it, and I think that tech is following through. So yes and yes, and I've been saying that for some time. So it's not like, oh, the price action. I was saying that as the prices were collapsing in October, and when the price was collapsing in June in crypto, that I've been positive. No, I hope I'm right. I'm not always right, as we all know, right? Do you think there's a chance that the debt bubble would eventually burst? Obviously, we've all thought a lot about this topic, and I've been writing a lot in Global Macro Investor about this. And I think the answer is it cannot burst. A, they can't allow it to, because it's too catastrophic. But B, quantitative easing means that they'll never burst. So the government can just endlessly finance itself, print more money, and they can endlessly print more money to make sure that the value of assets, the collateral of the system, goes up, and therefore nobody's insolvent. We saw that in 2020. And I think that was the big signal for me, is they can't allow the insolvency. Remember, I had that insolvency phase idea? Well, that never happened. What stopped it is the Fed came in and said, no, sorry, your collateral's not going to go to zero. And so don't forget, we've got this massive pension system, and the liabilities there are a huge problem as well. So they just can't allow it to happen. So I do not think the debt system bursts. I think it dies in different ways. I actually think it dies from over time. I think they have to get GDP growth above debt growth, and that's going to take time. I think it's going to take a change in the demographic, i.e. the dying off of the baby boomer population, and then GDP growth driven by technology and productivity growth has to go up. So it's actually a long-term game, and I think they'll hang it out for as long as possible, much like Japan has been doing and Europe's been doing. I think it's a long-term game, and what we get is the debasement of assets to counteract it. Debasement of currency, which leads to higher asset prices and everybody getting more and more angry because the markets never go down. So I actually think that is how the world works now. And I know people don't want to believe it. I think you're going to blow up yourself if you try and fight that game. I think we just proved it again. Yeah, nice shirt, by the way. It's the Irresponsibly Wrong shirt. Dusted out the wardrobe just for you guys. I thought, you know what, I want to make a statement. And I am all in still in crypto. So about that. What about the dollar? Good question. Seen a few of those wing by. Just great. Short and long term. Short term, I think the dollar falls a bit further. Might even get down to 95 in the DXY. So that's the unwind, the A. It's where it goes back again. But structurally, the dollar's in an uptrend, and it's driven in an uptrend because 85% of world trade is in dollars. 400% of GDP in debt is dollar-denominated debt. So we've got a structural shortage of dollars, and that shortage of dollars, either in times of crisis or times of boom, tends to drive the dollar higher. So still remain a dollar bull. And here's a good story for you, actually. I was living in Spain in 2012, and we just had the massive financial crisis in Europe. We almost lost our banking system, had to buy a generator and tin food. It was crazy shit. Terrifying when you lose your banking system. And Cyprus lost its, obviously completely enabled, savings are wiped out. So it was a mess. You had to take cash, put it out of home, try to find gold, all of this shit. Luckily, the money printer stopped the collapse. A big lesson to be learned there. I didn't really still believe that to be the case, which I now do. But at that period of time, the euro was trading about 148.5, 148 against the dollar. And I was living in Spain, and I had euro savings, and my business, Global Macro Investor, was billing in euros. And I took the ridiculously brave bet, kind of like this crypto bet. And I went, yeah, it's actually just like this crypto bet. I just went, fuck it, I'm all in on the dollar because this is the wrong price. And Europe's got a structural problem here. And so I switched all of my life savings into, it's exactly the same as the crypto, just has less bang for your buck than the crypto does. So I switched 100% of my life savings into dollars. I then changed the billing for Global Macro Investor into dollars. And then I went and bought two properties, one in Cayman Islands and one in Miami, because that would stop me trading out of my position, which is what I've done with crypto. Like I started this exponential age fund of hedge funds. So you get locked up for 3 years and stuff like that, ways that you don't outguess yourself, because you'll get these 2-3 year rallies and then it falls away. And we saw huge moves up and down, but that bet's been the gift that keeps on giving. And it also reminded me, another nice story about that trade is I was thinking through this mechanism of asset allocation in that kind of very big global macro terms, right? I want dollars. How do I hold dollars? Well, I can buy bonds, I can buy equities, I could buy assets, real estate, art, stuff like that. Stuff priced in dollars. So what you're doing is you put it in dollars, you're now in that currency, and your base currency is that. So then if you buy real estate on top, and real estate goes up 50%, so you get the dollar appreciation plus the 50% or multiplied by the 50%. So it gives you super leverage on your dollar position, but you're still in your dollar trade. And I hadn't really figured this out properly, what it actually means. Now, I could have chosen stocks, but I didn't want to take that risk. And I did have some bonds at various points. And so I would take the interest on that. Bonds went up and the dollar went up. So I made a really decent return from doing all of this trade. And recently I realized that this is the same trade I'm doing in crypto. So if you look over there, you see my NFT, there's my Bored Ape and Punk and all that stuff. They sit on ETH. So you make an allocation to ETH, that's the economy I want to allocate to. And in that economy, I try and buy a fixed asset, because fixed assets are scarce and they tend to do well when things are booming. So you buy a fixed asset, which is a rare NFT, or a community asset, which is something different, but an asset, or maybe like an equity, whatever. If that does well as well, it gives you the return over ETH. So if ETH goes up 10x and they go up 3x, you make 30x returns. Yeah, you don't think about this, do you? It's a free call option. Real estate is essentially a free call option on a foreign bet. So NFTs are a free call option. Free meaning, now, if you buy a shitty NFT and you lose money, that is your fault. If I buy a shitty NFT and lose money, that's probably your fault as well. Let's just get that straight. No, but generally speaking, you buy good assets, their volatility is less. So that Bored Ape has been stuck at not this particular one, but the floor price has been stuck at 65 ETH for a year and a half. So it's pretty stable. So what's the downside? Well, in the panic in June, they went down maybe to 55 or something. So the downside's about 55. What's the upside? Well, it's been as high as 3x this. These are great call options to own, and I still have my ETH bet. So even if my NFT goes to zero, I've lost a bit of that, the call premium, but the ETH is still there. It's really interesting. They obviously compound on the downside too. So when you've got a down market, your NFT falls in price and the bloody ETH goes down. Anyway, so that's the story of the dollar, and I'm still bullish dollars for the same reason, and I won't change that view for a bit.
Leave a comment with your ideas below, and we appreciate you tuning in to Market Empire. If you enjoyed this video, please give it a thumbs up, share it with your friends, and subscribe to the channel.